What's up, guys? Today we're going to be talking about short-term capital gains and what to expect as far as how much you'll be paying with short-term capital gains and what are some of the rules involved in it so that you can make decisions with your investments that help you make a better decision when it comes to buying or selling or holding. Let's get into it. All right, so jumping right into it. So a short-term capital gain is an investment that you receive or realize from selling personal investment or investment properties that you have held for a certain amount of time. So there are two types of capital gains that you'll pay, either short-term or long-term. And today we're specifically talking about short-term gains and some of the details involved in that. Now, stick around to the end of the video. I talk about the most important point at the end when it comes to mitigating taxes and paying less capital gains, whether short or long term, with your investments. And so a short-term capital gain in terms of stocks and crypto is anything that you've held for less than a year. Now, the taxes that you'll pay on that is what your current tax bracket is at. So it's the top end of your tax bracket when it comes to short-term capital gains, and that's what you can expect. So the same taxes that you'll pay from your 9-to-5 job will be what you pay on short-term capital gains. Now, real estate is a little different because real estate has different rules depending on what state you live in. So I live in Utah personally, and the short-term capital gains is anything that's under 2 years. So 2 years or longer, you don't pay short-term capital gains on, but you will pay long-term capital gains, which is significantly less. And so let's get into some of those numbers here. Here is the tax bracket for the single file tax bracket. So say you make $30,000 a year, you will be paying 10% tax rate on your first $9,950. Everything after that up to $40,000, you pay 12% on. Now, what I mean by paying your top tax bracket when it comes to crypto and stocks is that you will be paying 12% short-term capital gains and not the 10. And to show you the married filing jointly tax bracket, it's a little different. If you take a look at the numbers here, you can figure out based off of what I explained earlier where your tax is going to be when it comes to short-term capital gains and how much you'll be paying from you selling your crypto or stock. I will also be leaving a link below for you guys to take a look at this if you are interested in taking a deeper dive into these numbers yourself or on your own, so that you don't have to refer back to the video. You could just click on the link and go straight there and do the math yourself with your own numbers. So let's run a scenario here. So let's say you are single, you make $30,000 a year, you bought Apple stock, you put $1,000 into it, it increased by 50%. So you're left with $1,500 in your account and you sell under a year, wondering what do I pay in taxes on the gains from my investment? And so this is what you'll pay. Now, a quick disclaimer here. I'm not a tax professional. This is not advice. I'm not telling you to sell your investments short term or long term or to hold or anything. I'm just giving you information so that you can take a look at the types of investments that you have and make an educated decision on how to best move forward with the investments that you have, whether it's crypto or whether it's stocks or whether it's real estate. And so I'm just giving you some information so that you can be more informed and more educated and in the know when it comes to how to best handle your money and your assets and your investments. There are also a lot of different scenarios in which taxes might change a little bit depending on state to state or different types of investments that you currently have and how things run with your own personal finances, whether you own a business or you work a normal 9-to-5 job. There's a lot of variables in this whole situation. And so be sure to talk to a tax professional when it comes to making decisions with your investments. Like I said, this is just information to help you make better decisions with your investments. And this will most definitely help you make decisions on whether you're going to sell or not. And so it's up to you. But like I said, talk to your tax accountant and they will help you make the exact right decision, what you need to make. And they will be the ones to advise you on how to handle your investment. So let's jump into this. We've heard a lot of people coming out as crypto millionaires, or people becoming millionaires off of the AMC and the GameStop situation, or maybe you just hit it really big with some of the stocks over this last year and made a lot of money and are wondering what type of taxes you're going to pay. So let's run through this scenario where someone may have made $1 million off of Doge. They became a Doge millionaire, and taking a look at if they were to sell their investments under that year period. Let's dig into the numbers here. So back to the chart here when it comes to paying taxes. So one thing you got to remember is that if you sell one of your investments, that instantly becomes income, and that could change where you're at in the tax bracket. So remember, our original scenario is you made $30,000. Let's say you made $1 million off of your Doge when you sold, right? And so boom, that instantly puts you up here. So you made, let's say you put $100,000 into Doge and that turned into $1 million. And if you sell under that year, that would put your income bracket here up to the $1 million or the $523,000 or more bracket. And so remember, we're talking the single filers here again. Like I said, I'm going to leave it in the notes below so you can refer to this on your own time and based off of your own numbers and whether you're married or single. And so that instantly, you sell under that year period, and that drops you into this tax bracket. You would pay 37% of the gains that you had on your Dogecoin. And so that would drastically change the amount of taxes that you would pay versus, the 12 or the 37%. And also, one thing you want to do is highly consider holding off to that 1 year period if you're really close or whatever. And so, but like I said, this is totally 100% up to you. The decisions you make with your investments are on you. The consequences that you have are not on me. This is purely for educational and informational purposes only. And so, taking a look at the taxes, you would pay quite a bit more. So let's say you made an initial investment of $100,000. The investment turns into $1 million. So your taxable gain is $900,000. And so you would pay taxes on the $900,000, and you would pay 37% of that $900,000, equaling $333,000 is what you would pay in taxes, leaving you with $567,000 that you can put into your account. Now, this might seem a little bit weird or harsh, and it absolutely is. And that is the deal with short-term capital gains. You just got to be very careful on how and what decision you make when it comes to paying taxes with your gains from your investments, whether it's crypto or whether it's stocks or whether it's real estate. Okay, so now one thing to remember is your short-term capital gains can be offset by your investment losses. And so it is super, super important. I cannot stress this enough, that it is the most important thing for you to do when it comes to investing, to track the losses that you have on the investments that you have. So there's a lot of people who lost a ton of money when they bought and sold crypto or stocks during the whole run up with AMC and GameStop and Doge and Bitcoin. And there's a lot of people that lost money. And so this is the most important thing that I want you to take away from this video, is that you need to keep track of your losses. If you bought and sold and lost money on any of your investments, whether it's, like I said, stocks, crypto, or real estate, your losses will offset the capital gains that you pay at the end of the year. And so keep track of all those things, mitigate the taxes that you pay when it comes to investing your money. And this will make you so much more money if you keep track of it. A lot of people just let the losses go by the wayside and take the loss and lose their sleep at night and stress and worry about it. But it's not that big of a deal if you keep track of it, because it's a tax break when you keep track of the losses that you have from the investments that you lost on. And so Do me a huge favor. If you guys appreciate this video or you found any value in it in any way, do me a huge favor, hit that like button, ask some questions in the comment section below, and drop a subscribe if you want to see more content like this. Thanks a ton.